Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. And also in this video, let's discuss the probabilities of the different scenarios and which ones are preferred or alternative. Starting with this expanding flat bearish ABC scenario, where the most common target for this wave B is between the 1.38 and the 1.236 taken from the high to the low of wave A, which is in perfect confluence with the 2022 range highs. Now inside of this wave B, we are then looking for a three-wave structure, which then also looks to be another expanding flat in an ABC, where this wave B bounced from the target area for wave B perfectly for then an impulsive structure to the upside in a wave C, as an expanding flat is a 3-3-5 wave structure. The most common target for a wave C is between the two 1.618s. And this is the thing with this scenario over here, because if price wants to move towards the upside, towards the most common target of the purple wave B, it is going to move outside of the most common target area for this wave C, in this then being an expanding flat. Now, price can move towards the upside and still reach the rare target for the blue wave C over here, which is the 2.618 that we have sitting at about 32k. However, this is a rare target for a wave C for a reason. And also, this rare target for a wave C is still below the most common target area for a wave B. So what does that mean? That means that if price is going to move towards the upside outside of the most common target area for the blue wave C, takes this local range high and moves towards the upside towards the most common target area of wave B, then this scenario, being an ABC expanding flat, is actually gonna get less probability. The probabilities of this scenario are actually going to the downside. Even though price might reach this area, it is not in confluence with the ABC expanding flat scenario that we have inside of this wave B, which then means the probabilities go down in this particular scenario. So if price is going to get to 32.4k, this scenario has less of a probability. Now, another alternative one might think about is, can this still be a regular flat? And a regular flat is a 3-3-5 wave move, where then wave B is just about taking the high of wave A before then continuing to the downside in a wave C, which should be an impulsive structure. Now, price did take the high over here at 31k, and a maximum target for a regular flat can be seen by pulling a Fibonacci from the high to the low of A and then putting it on the wave B regular flat target, which means that the maximum target for a regular flat is hitting the 105, which already has been done. So we get the same problem for this scenario. If price is going to move towards the upside and take this high, a regular flat goes down in probability. So basically what I'm saying is, if price is going to move towards the upside, the probabilities of seeing another low below this wave B at about 24.8k is going to be significantly lower. If we then move towards the impulsive scenario, which in the bearish scenario, as you've just seen, is then a wave C in an ABC, what are we looking at, right? So if we go to the 1 hour, then over here, we've been looking the past couple of days at this wave being a potential wave 4 and then a 5-wave structure to the upside, expecting potentially another wave 5 over here, looking at that 2022 range highs for maybe a liquidity grab, and then a move towards the downside. This move towards the downside has then less probability of being a wave C, as I just mentioned, going all the way to the downside below 24.7k. Then the move to the downside might be more bullish, in this being a wave 1, 2, and then a bigger 3, but more about that in a second. First of all, let's look at this wave 4, because the wave 4 over here is a very, very long wave 4. I am happy though that this low has been made before the 3-fib time, because I've been talking to you guys about the 3-fib time, and I don't like wave 4s to be longer than the 3-fib time, which is taken from the high of 1 to the low of 2 to then the high of wave 3, basically comparing wave 2 with wave 4 over here in time. And the low has been made before the 3-fib time, which is nice. But also in this particular scenario, I then prefer this to be the low if this is still going to be a wave 4. The other fib time that you see on the chart, the white one with the 1-to-1, is taken from the low of 2 to the high of 3, which compares the time of wave 3 with wave 4. And it is nice if wave 4 ends around the 1-to-1 or maybe slightly after. So actually the low that we made over here is quite a nice low for then a wave 4, and then looking for more upside in a wave 5. However, If price is going to move towards the downside again, I'm definitely going to favor other scenarios, and I'm going to talk about these in a second, because then this might already be the high of 5, and this is then the beginning, or actually like this. So over here is then going to be a corrective structure to the downside with eventually potentially more bullish momentum. If we zoom out once again and go to the 12-hour time frame, another scenario one could have in mind is a WXY or the regular flat ABC. But again, I already spoke about the ABC actually, so let's focus on the WXY. So we then have a 3-wave structure in a W, 3-wave structure in a wave X, and then we would be looking for a 3-wave structure in a wave Y. Now a wave X can extend to also the 1.38, same target as this being an ABC expanding flat with the target around 32.5k, right? However, the same problems apply with a WXY scenario over here, where in this wave X, you are still looking for an ABC expanding flat, and going above this high over here, the local range is going to strongly lower the probabilities for this to be an expanding flat ABC, meaning that the probabilities are going to increase for this to be the low of a corrective structure and this to be the beginning of a new impulsive structure. So what I'm saying here is, again, if price is going to move to the upside and takes this high and maybe even go to 32.5k, the probabilities of this being a wave 1 compared to this being a wave C, because if you see an impulsive structure, you always have to think if this is a wave 1A or a wave C. But if price moves towards the upside, the probabilities of this being part of a wave 1 or wave 1 already finished is going to be higher than the probabilities of this being a wave C and seeing a lot more downside potentially below these lows. And what is interesting as well is that if we zoom into this structure, then 69 Miaoxuzi, he's in the Discord group as well, and he actually notified me on something, is that the lows over here on the log chart with the log Fibonacci settings has not yet hit the 0.236 Fibonacci. However, if I switch this Fibonacci to normal linear scale, and I actually changed my chart to the linear scale as well, then you can see that the 0.236 has actually been tapped, and that's what he said in the group. So that is actually quite interesting. Now, that does give us a very, very potential rare scenario, a double rare scenario, because if we look at an impulsive structure that is finished, so this is now not part of a wave 4 anymore, maybe because of time, especially if we go down once again. But imagine in this scenario, this wave 5 is already in, right? We're then having a 5-wave structure to the upside, and this wave 2 retraced to the 0.236 taken from the low to the high of wave 1, which is an extremely rare target for a wave 2. Either it's not a wave 2 in that case, or it is a very, very bullish sign for then a wave 3, 4, retracing to the 236 as well, and then a wave 5, which then means that if this is the end of the medium time frame wave 1, this could be, in a very bullish environment that is, right, another retracement to the 0.236 for potentially again a wave 2, which is a very rare occasion built upon another rare occasion, or actually the other way around, right? Like another 236 on top of a 236 wave 2 retracement, which is something you do not see every day, that's for sure. So it is very rare, but then again, it is something we have to take into account, because if price is going to move towards the upside, and it is going to shoot past the most common target area for wave 5, including the 2022 range highs. If price is going to do something like this, then it's not, or at least very unlikely, this is a wave 5, and it's going to be more likely we are going to see continuation to the upside in this being a wave 1, wave 2, and then a bigger wave 3. So if price moves to the upside, a lot of things happen from an Elliott Wave point of view. So I will try to summarize this before going into the micro. First of all, with the bearish scenarios, if price moves towards the upside and takes the local high over here and moves to 32.4k, the bearish medium time frame scenarios are going to have lower probabilities than the bullish medium time frame scenario, which is this one over here, where either the low of 2 is in, or we still get a low for wave 2, right? Because is this the high of 1, or is the high of 1 still coming? That's the question. If we then look at the impulsive structures, if price moves to the upside, rejects at the 2022 range highs and comes down, it is more likely this is a wave 1 followed by a wave 2, and then we get a wave 3 towards the upside. If price, however, is going to take the highs, maybe reject a little bit, range, build some bullish divergences, and continues pushing, then it is more likely that this was the high of the first impulsive structure in a wave 1, that this was then the low for potentially wave 2, and continuation is going to be done in a wave 3 to the upside. So now let's then look at the micro bullish scenario. And actually I shared this in Discord actually before my 7 a.m. video at 6:53 over here on the chart, where I said, well, this might be the end of the corrective structure and then an ABC zigzag, but then wave B is complex in a WXY. And you can see that the most common target for wave C, being the 1 to the 1.236, is very nicely respected. And this was in the YouTube Silver member group over here, where if we then zoom in and we go to that micro bullish scenario, this is what I shared in the chart. And then you pull a trend-based fib extension from the high to the low of A to then the high of wave B. And then you put it on the zigzag targets, which is then wave C zigzag. There we go. And you can see the target area for the zigzag has been very, very nicely respected indeed. Now this WXY is not the cleanest, which I've also wrote in the group as well, but it does work. And again, we did have that support area over here, which has been tested 3 times, 1, 2, 3 times, and now also with this low, the daily at the lower end of the target box has been hit. So that is actually quite nice support for then potentially continuation to the upside on the micro time frame. If we then look at the CVD divergences very, very locally, so we're going to skip about what you actually see over here. This already played out. We do still have, by the way, bullish CVD divergences between the low that we have over here and the higher lows created, and actually almost also between these, like basically this range and the higher lows created. But I prefer to look more locally, as local CVDs always get priority. Now, if we then look at the local CVDs and we zoom in to the price action we had, then over here, price moving to the upside, CVD moving to the upside as well. So, you don't really see a lot of bullish CVD divergences. But if we then go to the 3-minute, then what happened is over here, we had news at 8:30 a.m. in the morning, Central East European time, which was around this time over here. And what happened around the news hour is we started to see bullish CVD divergences before the push to the upside. So over here, higher low on price, but a lower low on the yellow as well as the blue CVD, which you can see on the 1-minute even better. And that is very interesting for then this push towards the upside. And then if we look at this range over here, then once again, we had a higher low in price, and on the yellow line, a lower low in the CVD. So over here, we had some bullish divergences as well, target being this high, which has been taken. So at the moment, the CVD divergences, very, very locally over here, are neutral, and we have to wait and see what price is going to do, because we do have another news event coming at 2:30 p.m. Central East European time. So from the moment this video is online, 1 hour and 30 minutes left for potentially some incredible volatility, and hopefully we might see a breakout out of this range. And now we know, based on this video and what I told you, the probabilities of the different scenarios, because in the end, trading is all about probabilities and putting those probabilities in your favor for your different setups and your plan. Of course, no financial advice. You need your own plan and strategy, but at least having some probabilities from an Elliott Wave point of view might help you. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye-bye.